Student loans explained. Simply, why student loans feel overwhelming. Student loans confuse a lot of people. Some are told, they're an investment in your future. Others hear, student loans will ruin your life. The truth is somewhere in between. In this video, we'll explain student loans in plain language, what they actually are, how they work, why they feel so heavy later, and how to think about them realistically. No politics, no guilt, just understanding. What a student loan actually is. A student loan is borrowed money used for education. That's it. The money usually pays for tuition, fees, books, and housing or living expenses. You're borrowing from a lender with the promise to repay the money plus interest over time. Student loans don't disappear if things don't go as planned. They follow you until they're paid, forgiven, or settled. Federal versus private student loans. There are two main types of student loans. Federal student loans, issued by the government, usually lower interest, more flexible repayment options, and sometimes they qualify for forgiveness programs. Private student loans, issued by banks or private lenders, often higher interest, fewer protections, less flexibility if income drops. This difference matters more than most people realize. Interest. Why balances grow. Interest is the cost of borrowing money. Student loan interest accrues daily. That means it adds to what you owe every single day. Some loans don't charge interest while you're in school. Others start charging immediately. If interest isn't paid, it can be added to your balance. That's why many people end up owing more than they originally borrowed. Deferment, forbearance, and grace periods. Student loans often include pauses in payment, a grace period, usually 6 months after leaving school. Deferment or forbearance, temporary pauses in payments, but interest may still grow. These options provide relief, but they don't erase the debt. Pauses help cash flow, not balance. Why student loans feel different. Student loans feel heavier because they last a long time. They're tied to income expectations, and they often begin before real-world earnings start. Unlike credit cards, student loans usually cannot be discharged easily. That's why understanding them is so important. When student loans make sense. Student loans can make sense when education leads to stable income, when borrowing is reasonable relative to expected pay, when the loan fits your long-term budget. They become risky when debt is large and income is uncertain, when costs weren't carefully considered, or when private loans dominate the balance. Debt doesn't fail people. Misalignment does. Repayment options. Most federal student loans offer multiple repayment plans. Standard, income-driven, extended. Income-driven plans adjust payments based on earnings. Lower payments can help, but they may increase total interest over time. Private loans usually offer fewer options. Common student loan mistakes. Some common mistakes include borrowing without understanding totals, ignoring interest, avoiding statements, assuming forgiveness will happen automatically. Understanding your loans early prevents years of stress later. How to think about student loans today. Instead of asking, is student loan debt good or bad? Ask, can I afford this payment? Does this loan align with my income? Do I understand my repayment options? Am I tracking interest? Student loans should support your future, not control it. Final message. Clarity over fear. Student loans are not a personal failure. They are a financial agreement, one that deserves understanding, not avoidance. You don't need to panic. You need a plan. When you understand how student loans work, they become manageable, even if they're not easy. If this explanation helped you understand student loans more clearly, like the video, subscribe for more simple finance lessons, and share it with someone navigating student debt.